Good evening, all. Ira Epstein, and here we are with your financial market wrap-ups. And your wrap-up is for the evening of, and we are at Monday, a stormy Monday across America, the 8th of January, 2024, 6:20 p.m. Central Time. So we are hearing that just where I live, we could have 8 inches of snow in Illinois, around Chicago. With a little luck, the lake effect, and we live right on, I live right on the lake. It might actually just be rain. We don't know yet. But today I had to run out and get everything ready, make sure there's gasoline. I can walk to the Board of Trade, to give you an example. That's how close I live to the Loop, the financial district. And actually, there's a new one on Fulton, and I could walk there. So I'm very centrally located. But owning a home in the city, you got to do the sidewalks and also getting ready for all this mess. But it's across the country. New Jersey's declared a state of emergency. I mention it because here's the first cold weather coming into the country. December was unbelievably mild. So now you're starting to get a bid tonight here, a little bit of stability coming in on the energies. Why were energies down so much today? If you get my full research, I wrote about it and I said Saudi Arabia surprised the market and has cut prices across the board to Asia in a major way. And the idea here is, number one, spur up demand, take the markets where they're going to go. As I also said, that should help President Biden because he's trying to buy another 3 million barrels of oil for the strategic reserve. I looked at the tender prices. There's no reason he's not buying it. So I expect that he bought 3 million or he's accumulating in some manner the 3 million, and he'll announce that they've got that bought, and they should. They should be buying every month. Even at this pace, understand if you buy 3 million a month and you took out 180 million, you've got to replace this over 5 years? Long time to go. Real long time, but you've got to do these things. In the metal markets, we have markets that are trying to find a little bit, if you will, of a trading support in the 2040, 2050 area in the gold. All day long, you were down in the Dow. All day. The other indices were up, and that obviously had a lot to do with Boeing. When we saw the panel on that emergency door area blow off the plane. Now, I want to tell you, with my experience of planes, I had my pilot's license, so I have some experience, okay? And certainly never flew a jetliner like that, nor could I. But having had my experience, having sat in jets in seats, my buddies have taken me, and I have sat in the co-pilot seats flying. It's beautiful. Now, I didn't fly the plane, but I got to have the experience, and it's absolutely phenomenal. Of course, it's a computer that's flying the plane today. It's the landing and the takeoff where the pilot's all involved, and after that, you're in communications, switching around. But my point is, this is what makes the planes get better. You never know you have a problem till you have a problem on newer aircraft, and that's what this is. They are finding loose bolts on other parts, so they are finding the culprit here. They will make the manufacturing change, and what you will have is a better airplane. Nobody got killed, thank God. I fear that had somebody been in that seat next to where that panel blew out, even had they been strapped in, they'd have died. Nothing would have surprised me. I heard that a shirt was pulled off a young child from the air pressure, just ripped off his body and out there. Phones gone. So they're finding all kinds of things. I mean, the depressurization, I've been in a plane that had that happen. Not that type of blowout, but the pressure fall apart. And I'll never forget it. At 15,000 feet, we nosedove basically down to about 5, and you want to see people panicked? It's unbelievable. And that's what can happen. You just going down very fast. It's controlled, but you want to get to the point where there's fresh air so that people can breathe, because those masks, they can do it for a while, but that's it. All right, so now what else? Well, we're not hearing too much, are we? Yet. All heck's going to break loose. I'll use the word heck. I'll be a gentleman here. In Congress, in the chambers, they've got to come to an agreement or no agreement. And I don't see the Republicans giving up on their border demands, and they shouldn't. The border's everything. I wrote tonight how creative Ukraine has gotten. What they're doing with small commercial drones, not the ones that are military, how they're packing them with munitions and what they're doing with them so that they can fight on the front line and how accurate these little things are. And the cost is maybe $100, $150 a piece because they're running out of the big arms until the U.S. can get something done for them. Fascinating to see what a fighting spirit in these people are and how creative they are. In the rest of the markets, what are we going to deal with? Well, that's going to take center stage. You haven't seen it yet, but now we're going to start focusing on all that. The rest of the week's going to be CPI, PPI reports. We'll hear more about China. Consumer confidence tonight in Australia, strong, very, very good. The market is also expecting that by May, I'm just telling you what I was writing about tonight, that the Reserve Bank there will start cutting interest rates. We'll see where that goes. In the U.S., we today saw interest rates finally falls back a little bit. And this is the first really full trading day, as I look at it. The whole market kicks off this week. Everybody's back. The vacations are basically over. And now you're getting back to normal trade. I watched the volume in my firm. It tripled today. So that gives you an idea compared to what it was just last week on a few days. So people are back and they're doing their trading. All right. When we take a look at the S&P, you're up near these highs. I mean, on a closing basis, you're points away from the all-time high close. When you take a look at the market, you can see the resistance point right here. We're caught in a trading band. You had the 5-6 day break, and now you've made back a lot of that today. But are you really trending? The answer is no, a flat no. You have a higher high, a lower low. I question if you're going to go back to the patterns of if you have an up on a Monday, you have a down on a Tuesday. It'll be interesting to see if we get into those patterns, or a down on a Tuesday and up, a down on a Monday and up on a Tuesday. We'll see if that works out. I had a good friend, Mark Leibovitz, that used to use that, and I learned from him. He was a proponent of watching that. And he did volume analysis, very, very good trader. And higher highs, lower lows in there, watching how the markets are playing out. I'm seeing the battleground shape up here at the 18-day average of closes. And that's where I'd expect the battle to be fought. And I'm looking at Bollinger Bands narrow in. Generally, not always, but generally, when you start narrowing in Bollinger Bands, it means that volatility is going to come out of the market for a bit. And I think that's what you're getting to right now. It all makes sense because you've got to figure out where we're going on CPI, PPI, and this debate on the budget. It's all right in front of us. It's going to be all over the news starting tomorrow. So I'd be watching that very carefully. And momentum has gotten itself fairly flat. In the NASDAQ, same thing. I was telling traders, you just came down to the Bollinger Band. If you've taken my enhanced Bollinger Band course, you will learn that when you hit that band and you're not embedded, and if you want to learn what that word means, it's all in the course, but you didn't lock in underneath 20 and going sideways for days, that's the cover short area. And the neutral area, the bounce point, is the 18-day average. On all charts I use, the neutral point on a chart is the 18-day moving average of closes. I used to buy services that would go in and they would say, oh, you're better off using the 20 or the 21 than the 18, or the 18's better in this case. I found it to be a waste of my time and money. The 3-day difference out of a 20 or 21 to change the little bit of the number made no sense. So sometimes you drill too far down and it doesn't make good sense to do it. I'm comfortable with what that is. Here's a prime example in the Dow of how narrowing in of those Bollinger Bands, how you're going flat in momentum and basically flat in price temporarily, all for the reasons I've just espoused. When we take a look at the mini Russell, I'm looking for the 18-day average to be the fighting zone again, and it appears to be it. Now, in all of the stock indices, if you go back to about October 27th to the 29th, you bottomed out, you rallied up right until the very end of December, and then we began that correction. They're all following very much the same pattern, and now we're getting away from that. So finally, we're getting away from this upside here, now the correction, and where are we? New trends are going to be coming about soon, so be patient. They will show up. When we come to the 10-year note, I expect the battleground to be the 18-day average. And very slowly, look at how the Bollinger Band arms are wrapping in the black dashed lines. They're starting to wrap to the price. Expect some volatility to come out, which makes total sense in front of PPI and CPI reports, and then we'll probably pick up the volatility again. Same thing in the 5-year notes, absolutely there. In the dollar, what do you do the first time you hit a 200-day average? What I teach and what I've recorded for my new charting course that I don't know if it'll be January, it'll be February it comes out if I'm as busy as I've been, and I am swamped right now. But in looking at it, and I'll be back recording chapters tomorrow, I already did the course with the 200-day, and I promise you what I'm teaching is first time you hit that, you pay great attention. It's a 1-year moving average, if you think about it. I wish the markets had embraced the idea of a 250-day average, a true 1 year. It's very close to, you either have 250 or 260 business days a year, depending on the year. Well, 200's not quite there, but it's what the market embraces. And just go with what the market embraces. Never fight the marketplace. Go with the market. That's the number they'll look at, and that's your battleground. You're hearing people say, well, if you can get through that, your rally, the dollar might go to 104. I've already heard that today on CNBC. Well, where do you think they got that average from? They're looking at the 100-day average. I don't know that they're right or wrong. I know that there's no trend on the market. I know it fell back to the 18-day average. It had been down hard, rallied up, got to the 200. We had talked about it, and I said it's probably going to cap itself between those two, and it's just what it's doing right now. There is nothing to trade off of it yet, though. When I come to the eurocurrency, it's the same thing. You came down to the 200. It's the flip-flop, down to the 200. Remember, 40% of the weighting in the dollar index is the euro. So they flip-flop. I teach, never have a euro and a dollar position. You've effectively got your dollar position through the euro or your euro position through the dollar because of the weighting. Trade the other currencies then with it. You can be in the Swiss versus the dollar, the Swiss versus the yen. I mean, there's many things you can do. In any case, this is the battleground, 101.30. We'll see if the market can do anything over that. When we look at the British pound, I like the British pound on the long side. The market is still looking to me like it's going to try to get up to the upper Bollinger Band. Support's all the way back at 127.10. You hurt the chart if you get under 126.16. That does the damage to the chart. But until that happens, you have the trend up, the bias up. It's sort of a sideways action market. You can see that with the Bollinger Bands and momentum still pointing up. In Bitcoin, so let me explain where you're at. You now have 48 hours till the SEC tells us what they're going to do, and this market's going crazy with it. You're up to 47,000 now. I have been telling my clientele every morning in my subscriber video since November, a concept trade to buy long in the 38, 37,000 range, get out 42 to 45,000 on part of the position and hold the balance. You can prove it, it's where you're at. But I also told them the risks are insane. I mean, it depends on the kind of trader you are. What I've learned on Bitcoin traders, honest to God, these people get in, they don't trade it like normal folks. Normal guy loses $1,000, he's panicking. These people, I'll just buy more. Okay? Obviously, the market is playing a game now, a price war. I don't know if you saw it today, but the different firms that have filed with the SEC have now told you what they're going to charge in their funds. In other words, there's a fee that all funds charge for, we'll call it maintenance, maintaining the fund, what it's doing, what it's buying in it. They're not going to be using futures contracts, so they're getting rid of a lot of that expense in a lot of these funds, but they will have a quarter of a percentage point of expense to 0.26. It's a price war. I've never seen this come out so aggressive on anything, and there's 3, 4, 5 firms already doing this. It's interesting. This is their opening prices. They may go cheaper than that before it's all said and done. When you look at Brent versus WTI, well, the market's comfortable in this $5 range of the differential between the two. And I expected today you were going to see downward move in all these markets because the Saudi move when they cut prices. Are you trending? You're not. You're wobbling back and forth. And again, that first challenge of a 200-day average after you were all the way down here proved to be a big-time resistance point. Same thing happened in WTI. And do you not think you're fighting at the 18-day average of closes looking for the next direction? You don't have one. You have a higher high and a lower low. That's not a trend where I went to school. You're fighting in the heating oil to lift. Cold weather, that's what it's going to look at. Do we get 16-degree days? Do we get sub-zero days? How much heat demand's going to come? You don't want to be bearish when you got winter storms rolling through the country, and you're starting to see that. You get an idea with an outside day down that happened today, Monday. If you take out today's highs, Monday's highs, tomorrow, look for an immediate challenge, in my opinion, at least. Doesn't mean I'm right on this, at 264.66, the 200-day average. And if you can clear that, you might get to the Bollinger Band. But it'll be a weather event more than it is a technical trading event. Natural gas, same thing. You count that you get cold weather, you're going to draw out natural gas. It's not a time to be short. And I've said that to you before. I said, you now want to be playing that you're going to get those winter months. Eventually they show up. And as beautiful as December was, and it was the mildest December in current times, now winter's arrived, old man winter. And it's going through the whole country. So keep your eye on it, see what it does. It's not the place to be, in my opinion, short the market because of that. There's a time and place for it. You're getting overbought. Will it stay bullish like this? How long will the weather last? We have another storm system right behind this one. Then we'll see what the next forecasts look like. In the meantime, one of the things that I'd love for you to do is take advantage of our free access for you to our mobile app. I think you'll find our mobile app unlike any you have used. Number one, you can read it for the quotes. All right, you're going to see the size of the quotes and everything we give. You can read this. I can't read half of them that the companies give me. And you'll say, oh, Ira, get glasses. I had glasses. I had the eye operations. I'm fine. My eyesight's not bad. You're trying to put in things that you can't read. I can read these charts. They try to put too much on the other charts. I've learned it. And by the way, that's one view. You can also go to the landscape view. All my videos will play on this. So that's another thing. I send you out, even a text message to my subscribers. Our news stories, I think they're phenomenal. Then we do oral updates during the day. I don't do them. The firm does them, and we have so many of the different ones that are coming out, and you can listen to all these as to what they do. But you're driving in your car, you want to be able to hear quotes. We have voice control. So all you have to do is, we've built it into the app now. You're driving, hey, play my quotes. You preset your quotes, they're going to rotate and play right in. If you got real-time quotes, they're going to be real-time. Away you go, turn them off. You're driving and come back later. It's pretty neat when you think about all the different things. This was well thought out. I've been involved in creating all kinds of software and apps my whole career in this, and I think if you try it, you're going to like it. It's free to give it a try to you, okay? It is also free if you have a trading account with us or you get my paid subscriptions. So, IraEpstein.com, free offers. Move your cursor up here, same identical thing. I'm Ira. You have yourself a great evening. I'll catch up with everybody first thing in the morning. Take care.